Hey, I'm live. Hello and welcome to What the Heck is Jason's Portfolio Doing Today? That's actually not the name of the show. Today's show is called Preserving Your Capital. It was inspired by a Facebook comment I got on my video from yesterday. I'm getting some interesting feedback and some direct messages of people that I've worked with before on investing and they want to work with me again. So that's cool. Some people from my old investment club are signing up. So that's cool. I don't quite know what I'm going to do with it. Maybe I'll have a free Facebook group instead of also the paid investment club. But anyways, we'll figure that out later. For right now, you guys want to see my portfolio crash and burn, right? Because yesterday the markets were red, both in the US and in Canada. So what's that going to do to my portfolio? Because I had a good day in yesterday's video. We'll take a look. But let's take a look at some of the feedback I got that inspired the post or the title for this video, Preserving Your Capital. So after my video, the first comment on one of the Facebook groups I posted it on said, do it for 5 years while preserving your capital, then claim you have a system. Making money over the past 4 months is not a good indicator of future performance. Okay, a couple things here. I've been doing this for longer than 5 years and preserving capital, so that's one thing. The making money over the past 4 months, the US portfolios I'm showing in my videos, I actually just started 4 days ago. So all of the $5,000 of profit you see in my portfolio, it's since Tuesday of this week. I was in the Canadian markets up until last week, and I converted all of my Canadian money, except for that one small portfolio, into US dollars. So when I'm showing you those ETF gains from this week, it's a totally new account that, well, it went from zero to what you see there, like after I converted the currency. So, and also, so claim you have a system. So what I do is based off systems that authors have written about. I've read their research papers. They have back-tested results from 1970, over 30 years of data. So like I've adapted the systems, but anyways. So my response to that was, what's going on there now? Okay. So my response was, okay, fair enough. I've been doing this longer than 5 years. And once upon a time, I did turn 20,000 into 42,000 in just over a year using ETFs. And I'm just sharing what works for me. So that's a story from a few years back when I had a different system where I only picked the top ETF rather than the top three. And I had a lot better performance. But of course, you get a lot more volatility when you're in one ETF versus three. So that's one of the adaptations I've done over the years. So I mentioned that yesterday the markets were red in Canada and the US. What happened to my portfolio? Well, it's interesting because in the first 15 seconds of the day, I had 5 alerts for 52-week highs on 5 of my ETFs, and one of them I didn't. So I had 5 out of 6 that had new highs yesterday. So when I was doing the video yesterday, I'm like, this is going to be awesome. We're up again. But the markets, oh, actually, I should tell you. Oh, this is the beauty of live stream. So this is why it's important to preserve capital, though, because if you lose 10%, you need 11% to recover. If you lose 20%, you need 25% to recover. If you lose 30%, you need 43% to recover. I know that doesn't make a whole lot of sense, but I talked to people yesterday that were buying stuff like airlines and penny stocks. So you can easily lose 30 to 40%, and you need that to recover, even just to break even. It's not just a 40-40. I know you don't believe me, so I'm actually gonna show a calculator and show you that, because it's kind of counterintuitive actually. So if you have $1,000 in a penny stock and you lose 30%, which is quite easy, so you lose $300, you're down to $700. Now maybe it'll go up 30%, so you can break even. No, you didn't quite break even. You need 43% to break even. So let's try that again. Lose 30%, down to 700, 43%. Now you're back to back even. It's counterintuitive, but that's the way the math works. So you don't want to lose money. It's super important not to lose money. And if you're in penny stocks, you could lose 50%, and then you need 100% to recover. It's crazy. So that's why I use ETFs, because it smooths out the volatility, because I'm in like 30 stocks at a time instead of one that's going to move, 30%, 20%. I used to trade stocks, and it's fun because you can get good gains, but you can also get good losses. So let's get back to my slides. So yesterday, was a losing day in the market. So how did my portfolio do? Well, the S&P lost 0.5%. That's not too bad, but it was red most of the day and it stayed red. So my US portfolio, I lost my worst performing ETF is I lost less than the index. My next one, I actually gained almost a percentage. And the next one, I almost gained 2%. So what does that mean overall? It means that I beat the index, the S&P index, by 1.2%, because I was up 0.6% in both of my portfolios, and I made $1,000 on a day that the market was down. It's pretty cool. I like that. On the Canadian side, what happened? Well, the TSX was down 0.39%. So my worst performing ETF was down less than the index. And then again, I had one that was up 1%, and I had one that was up almost 2%. So what does that mean in real money terms? Well, it means that I made $200 and I beat the index by 1.33% because it was down 0.4 and I was up almost 1%. So you take that 0.4 and you add the percent, I'm up almost 1.4%. So, I mean, that's a smaller account. I made less. But the thing is, I'm green while the market's red. So and how am I doing that? Well, first of all, you got to preserve your capital. How am I doing it? I'm buying better stuff. But how am I doing it? Well, I got to get this investment club going because I'm just doing this. Like, I've been doing this for years by myself, and I've shared it with investment clubs in person, but I haven't really showed it in an online group setting. So I got to figure out the tech to do that. I'm probably going to create a Facebook group where I can stream into it like this and have conversations with you either face to face or through the comments. Just stop sharing my screen, and that's it for today. And maybe I'll do a video tomorrow. Tomorrow's Saturday, so maybe we'll do an end of week recap, especially since my US portfolios are brand new. Like, I literally bought these 3 ETFs on Tuesday, Wednesday. Like, I can go into my account and show you the execution dates. It was 4 days ago. And so I made like 5,000 yesterday and 1,000 today. I mean, it's a larger account size, those ones. So if you wanted to see what your own account would do, just use the percentages. So like if you have 10,000, what would these percentages mean to you in terms of profit? I mean, nothing's guaranteed in the market. I'm just trying to, beat the market and lower my losses. So anyways, that's it for today.